Today, folks, we got to dive into the inflation data that is now tanking the market. But firstly, I want to talk about the negative rhetoric that is continuing to bring society down, and it's stopping you from getting ahead and getting to your fast-tracked early retirement, because I am seeing so many videos out there like this. Andre Gig posting at why you probably won't retire if you're an American. And I'm hearing this from so many people, and I feel like it's stopping them from getting ahead, as I've always been a glass half full, a optimist in my life, leading to opportunities that I found that led me to making six figures a year and continuing to post these videos for you guys. And at the same time, as everyone's thinking the economy is going to collapse at any moment, Taylor Swift tickets are selling for thousands of dollars, and these tickets are selling out like a year in advance before these shows. So clearly not everybody is as broke as they might be making themselves out to be. And even in this tougher market environment, as I've done for the last 8-10 years of my life, you should easily be able to still live well below your means and get a multitude of jobs and opportunities in this market environment that will let you save enough money, like even if it's an extra $6,000 over a year, $500 a month, you could invest that in Verizon or TELUS, which is highly suppressed in this market environment, and you'd be making enough off this 6.8% dividend yield to cover your phone bill in perpetuity for the rest of your life. I mean, my phone bill is $35 a month, and that's $7,000 invested would literally cut that bill. Heck, if you're a little bit more optimistic, you can come up with maybe 15 to 20K invested in Enbridge. You're spending $100 a month on gas to fuel your car. Guess what? That gas payment is now taken care of in perpetuity for the rest of your life. Find those little wins that are going to take you to the promised land of financial independence that so many people are experiencing during a time where there is such hardship because people are just not financially literate. Heck, you could put $6,000 away a month, and $500 is just not a lot of money. I mean, you should easily be able to come up with an extra $500 a month over 30 years by the time you're 20 to 50, guys. The S&P 500's rate of return over $1 million. You don't even need $1 million to retire, in my humble opinion, if you are living in these non-crazy expensive places like Toronto, where I live. So let's get into this negative media that I love because it persistently brings the market down and offers these higher rates of returns, these higher dividends over longer periods of time. Because I mean, we're taking a look at the S&P 500 here, and we are only trading down a blip this week of about 1.6%. Heck, you zoom out on the year to date, and my God, I really hope we can go much lower than where we sit, because there's nothing funner than buying the dips than buying the all-time highs. I like fear, blood on the street. As oil is starting to pull back slightly on the Canadian markets, we're still seeing pressure to the upside with a lot of the oil conglomerates. So the TSX has actually been holding up better this week continually against the backdrop of the S&P 500. But as we take a look at the consumer index, and we'll kind of abbreviate to the Canadian side of the border as well, but we can see that essentially the index for shelter rose in March, as did the index for gasoline. Combined, these two indexes contributed to over half of the monthly increase in the indexes for all items. And as mentioned, as oil goes up, that is going to be one of the pressured environments that's going to keep inflation high, which is dumb. They should be cutting interest rates now, because they need to see, further decrease and get back to that 2% level that they want. But when housing is one of the contributing factors, and housing is only being driven up from interest rates, I've said this time and time again, you raise interest rates, guess what? The mortgage is higher, which means the landlord is going to raise the rent on the tenant, right? Which means somebody buying a new house or taking a mortgage renewal is going to be seeing higher shelter costs. That'll only go down by cutting interest rates. We'll probably see that pressured relatively high for some time until it reaches parity, but still, even gasoline. And the government could obviously offer incentives. I mean, Canada, the US, they're huge conglomerates when it comes to oil production, yet we still ship so much of it in overseas. There's so many things about this at this point that just seem a tad bit redundant and a little ridiculous. So again, if oil can come down just a wee bit in the coming quarters, again, that's not going to do good for your stock portfolio. It will do better for the overall inflationary numbers, because here's shelter still going up about 0.4%, not as high as it has been, but it maintains at this kind of stickier level, right? Overall, though, everything else has been moderate to the downside or just slightly up. If oil stays high, the rest of this might tick up over time. There could just be a delay lagging factor to, say, food shipments and stuff like that. So if gasoline stays higher, expect inflation to remain stickier. On the Canadian side of the border, basically they're holding the interest rates like they are in the US, Canada here at 5%. It says that there's still likely there could be some rate cuts coming in June. I'm hoping that, in my honest opinion, I wasn't expecting rate cuts till summer or at least fall of this year. So it's kind of falling in line with my My predictions, honestly, I still think they should be cutting it sooner, but that could lead to some obviously pressures in the stock market to the upside, which I don't want to see right now. I like seeing Tesla down. I like seeing Apple get hit. I love seeing these companies that, these large like ticket items that have high, impacts from the higher interest rates continue to be suppressed, because I know when they cut interest rates over the coming 1 to 3 years that those companies are likely to start to rise and see better benefits, right? So this is your opportunity to be optimistic during the backdrop of troubling times in the market. So again, I get excited, yeah, when the market goes up. My portfolio is up $30,000+ within the last year, just rallying aggressively, I'm sure, with everybody else's. But come on, guys, like realistically, there's nothing more exciting than seeing REITs, beautiful real estate investment trusts, conglomerated telecom giants, companies like Tesla and Apple starting to trade at discounted levels because they just can't get the sales they were getting. I scroll through here and I'm always just shocked that the market has been going up as much as it has been. But be excited, be opportunistic, and look for those opportunities when they present themselves, because if you live like a lot of people do live in this mindset of negativity, that is all you're going to see out there, and that's all you're going to want to ramble about with your friends about how hard it is, how expensive gas is, blah blah blah. Go out, find yourself an extra side hustle instead of just rambling about crap that's negative, and go do Uber Eats or Lyft or whatever on the side of your job, and use that extra money to propel your future, because that's what I've done for the last several years, and it's made real estate affordable for me. It's given me all this opportunity that I have here today, and I know if you're watching this video, you are one of those people that are probably on a very similar path, and if you're not, consider subscribing and join me on this journey, because we will do it together. But on that note, I'd love to know what you think in that comment section below.